You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
That rockin' tune means it's time once again for a little show around here we like to call the option block. A little bit of fun, a little bit of wit, a little bit of wisdom, some all sorts of hilarity, at least we hope. And of course, a lot of analysis, unusual activity, all that fun stuff. Mix it together, you get the option block. You know what you get. And of course, you can find it on your favorite podcast providers, your iTunes, your TuneIn, your Stitchers, as well as, of course, via your favorite, theoptionsinsider.com, where you can get not just the audio, but also all of our great written content, breaking news from the options market, unusual activity, education, all that fun stuff. Check it out there if you are indeed so inclined. You can also grab our mobile app for all of you hardcores out there. And you can also join us live for the show every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via Mixlr, MIXLR. Follow us over there on the old Twitters or the Facebooks or the stock twits, and you can get the link and just bookmark it or follow us on Mixlr if you are indeed so inclined. You get notified the second we go live, and then you too can stream it pretty much from your platform of choice. It's pretty easy. Just click on the link, and you too can join the live party that is the option block. And joining me today for a little bit of partying, let's go all the way out, I believe, to Riverside, Illinois, where we are joined by good old Mr. Greasy Meatball himself, Mark Sebastian from OptionPit.com, as well as Carmen Line Capital. Mr. OptionPit/Carmen Line, welcome back to the show, sir.
Good to be here. It's a great rainy day here in Riverside, Illinois, but every day is a beautiful day in one of the 10 towns that changed America.
Indeed, sir. I think that's sounding a little bit better. I was sounding a little weird in my headphones here, but I think that's fixed. That's like I have to let people play around in the studio here when I'm not here. All right, and also joining me a little bit closer to home, actually probably equidistant, as Mark has argued, actually farther away than Riverside, as he will, I'm sure, argue again in a minute. We are joined by Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program to you, sir.
Happy to be here. It is sunny with blue skies out here in lovely, sunny, scenic St. Charles.
There you go. You don't get the weather we get down here, but the weather has helped. You got some garbage weather in the States, or excuse me, I should say in Chicago today, which rained out the Cub outing I was supposed to go to. So here I am, hanging out with you guys, doing the show. I probably would have been here anyway, just between me and you. I love to do the show with you guys. So I'm here. We're going to have some fun. Let's get right to it with the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. Like the man said, this is indeed the portion of the show where we break down what's moving, shaking, rocking, rolling in today's market activity. A little bit of a mixed up little kerfuffle there at the end of the day. There were some reports coming out about this ongoing Russian saga in D.C., and there were some reports coming out that Mueller's probe there, intensifying, perhaps has empowered a grand jury. Some of that starting to weigh on stocks to the end of the day. So the stocks ended up pretty much mixed, though, regardless. The Dow almost literally unched up a little bit on the day. The S&P off not even a quarter of a percentage point, and the Q's off not even a third. So all of them pretty much kind of reflecting mixed sentiment on the day, also reflecting a lot of the things we've been seeing coming out of the earnings forecast so far this week as well. And of course, VIX cash still in the double digits range, even if not quite so strongly, shall we say, not quite as robust as it was. It's not like 15 or anything fun like that. No, it's still in the low double-digit range, about 1040 to be precise. We'll see if it can hold that level or if it can drop down a bit after non-farms tomorrow, which would be oh so nice for my volatility views prediction. We got another day. We shall see what happens. That said, Mr. Meatball, we shall start with you as you are enjoying this fine, rainy, or maybe perhaps soon-to-be rainy day here in Chicago. What was catching your eye in today's activity, sir?
All right, well, let's start with the fact that St. Charles is much further from Chicago.
How did I know you were going to get on that
than Riverside is, all right? Chicago, I am the border of Chicago and my house, the city of Chicago, is approximately 2 miles, all right? So I think St. Charles is a little further away. Beautiful
We're
city.
about 50 miles out.
Yeah, beautiful city. But as the crow flies, we are much closer. And actually, even as the crow doesn't fly, the crow could leave Mike's house and I could walk and I'd beat it there. But no,
pretty much.
What's interesting is that this grand jury thing was a little confusing. I mean, if you kind of think about what a grand jury is, people are accusing. The one side is trying to accuse Mueller of being biased. Well, what's one way to get rid of bias? Oh, I'll do a grand jury decide rather than, going through the prosecutorial, process, that whole thing. So it takes something off that. And allegedly it was in D.C. And if it was in D.C., that's weird because the Trump campaign was headquartered in New York. So there's definitely something weird. But, it's not like this was what caused the market to sell off. It was already down on the day. We'd already seen things be a little bit soft. In fact, things have been soft for a couple of days. Yesterday, the Russell was down over 1%, almost 1.5% at one point. If not for Apple's blowout earnings yesterday would have been a really, really, really ugly, smelly poopsicle. Instead, it was just a poop candy as opposed to a huge poopsicle. And then we got a little follow through today, and I wouldn't be surprised if we got some selling tomorrow, even if non-farms are all right. Market seems a little toppy, seems like it wants to consolidate, pull back. I wouldn't be shocked to see, 24.25 or some sort of incremental 2-4% pullback out of earnings. Earnings season was really good. That is a great reason for people to come in and sell stocks. It's a little ridiculous, but people love selling stocks after a really good earnings season for some reason. You'd think the opposite. But then you'll see some retrenchment there. I think, down a few percentage points. I think we're setting up for something like that, mid-month. So I just, seems like every August something screwy happens, and this one apparently is going to be no different.
Well, I think a lot of things can be combined into that. Anytime you mention anything Trump and or Russia, you do get to that. I think the word strange or weird just needs to be automatically appended onto the end of that sentence. So that's not necessarily an aberrant outcome. By the way, your little statements, we love your little pearls of wisdom. Poopsicle, what's that? Would have been a smelly poopsicle if not for Apple yesterday. The pearls of wisdom keep on flying from the option pit, folk. Uncle Mike, have you anything to compete with smelly poopsicles, sir?
No, I mean, spoken by the father of a near 1-year-old. It's definitely, you can tell that for sure. But no, the poopsicle with which the market had around 2:30 today, it looks like, for the most part, we're above that right now, even in after-hours trading. So even though that was a little bit of, I think, to use your words, Mark, kerfuffle. It looks like we're all recovered from the kerfuffle at this point, and even if that is a kerfuffle, 5 points really isn't that much of a kerfuffle to begin with, in my opinion. And I think that just shows how the lack of volatility that really exists in this market, to where if we have a 5-point move in the S&P, we're talking about a kerfuffle. It's a really fun word.
It is interesting in that respect, isn't it? The other thing that I was noticing, and I know you're not a big VIX futures guy, but you're probably seeing this in some of the other things you watch. But VIX futures super stubborn. We've not seen them hit a new low since in a couple of weeks. And, they've been really stiff. The futures curve is stiff. The VIX is kind of slowly ramping itself higher. Late July, it got to 9.5. Now it's starting to creep back toward 11. We might see at least a little bit of action here. Maybe nothing special. I don't know. What are you seeing anything in some of the fun things some of the funness that you watch there, Mike?
There's minimal premium to be had in this marketplace. I'm scalping 1-day calls against my calls right now, and it's actually working because all the market's really not moving, quite honestly, but there is really not a lot of premium to be had out there in general. The one thing that I did notice is kind of the beauty of options going into the Apple earnings announcement, not going into it, but just the general covered call that we sold for the month on Apple. We sold the 160 call for August. The way with which
nice
we select the calls is we just basically take the straddle for the front month and then go right at the edge of the straddle, and 160 is about where it came to. I mean, there's more to it than that, obviously, but that's the general concept of it. And with Apple this month, it's really a cool thing about options of just having an understanding of how options work, in that Apple obviously had a great earnings announcement, and it went to the high 150s. I think it may have even gone over 160 for a little bit. I'd have to look to check, but it went pretty much right to the edge of the straddle part of it. And because of the fact that it did that, and even though Apple has gone up in value, yeah, there's been some time decay since then, but the 160 call we sold for $1.12 back when it was in the high 140s, and it's at 66 cents right now. So that kind of goes to show that you have to have an understanding of options, and that market, let's say you bought that call, market moves your way, but you're still losing money on it, not only for time decay, but also for volatility dropping, because just in terms of watching it that day after, a lot of the juice came out of that 160 call. So that's probably the biggest kerfuffle that I have going on right now, because there's really not a lot of kerfuffle in the kerfuffle-less market.
I love setting you up with a word that just blows your mind afterwards. But yeah, since you invoked the A word, not Amazon, but the other one, Apple, let's get into it. They were, of course, one of the big names reporting this week, and what a report they did. All the naysayers out there saying, Apple's dead, Apple's done, all that fun stuff. They still knocked it out of the park yet again this week. They were pricing in earlier in the week here. They were pricing in about $6, so about 4%. And going into their announcement, of course, they closed right around 150, about 150 and a nickel, give or take, and then just blew the doors off it, getting up about 9.25 or so up there, and getting as high as about up 159.75 intraday. So just blowing the doors off it. So that's $6, looking pretty cheap in hindsight. And actually, you guys were on the right tip with that when we asked you guys going into that earnings. We asked you, hey, market pricing about 4% or at about $6. Do you think Apple can do it? And like I said before, we do have a lot of premium buyers lurking in our audience, more than you might think. And you guys came out en masse for this one, saying about a third saying $6 is cheap, buy it. 30% saying it's fair. So you didn't want to do anything, wanted to kind of play the Goldilocks. Quarter saying it's rich, sell it. And then 13%, the inevitable 13% saying they cannot stand Apple. And looks like that third of you who wanted to buy it were on the right tip, because that did indeed work in your favor. One of the few names we saw this week which kind of just rally-ho, outperformed their straddle and kind of nice and easy. Some other names earlier this cycle, you had to really work for it. You had to scalp aggressively back and forth. And hopefully if you were somewhere near the top and near the bottom on those scalps, you could maybe make it work out. Apple, pretty easy, pretty cut and dry. If you bought premium out there, you did fairly well. Since you were just talking about it, Uncle Mike, I will elevate a question here to the trading block here, because you were just touching on it. Mr. Vic here wants to know, what's Tosaw up to in Apple right now? Well, so you mentioned your 160 covered call. Is that pretty much it, or you got anything else working out there?
That's it. I mean, it's a core holding in our triple income portfolio. It's also in the strategic night. But for the most part, just selling some calls against it, playing the wheel on it. It's worked out pretty well the last few months. We've done the 152 short put to get into it. We've sold the 152 half covered call, and then this month, after the 152 half call expired, we went out for August, and there was a lot of premium to be had. Not a lot, but there was more premium to be had, so we decided to go up a little bit and go all the way out up to the 160 level for August, and that's for August expiring on August 18th for all of you, to make sure that we're not confusing that with a weekly. But just selling some out of the money calls on it, enjoying the dividends that come in, and making a little bit of premium. And if it goes up, I have to admit it's not near as exciting as the old days based upon the position size that we have, but it's still fun.
And did you say, was it weekly call? Which call were you writing?
It would be the standard expiration one, so it expires on August 18th.
Okay, so there you go, Mr. What was it, Vic? Mr. Vic. There you go. You wanted to know, and so there you go. You got it. Mr. I almost said Rock Lobster. Mr. Meatball, I'm sure your hardcores, your crazies in the pit chat over there were slinging a lot of Apple. What were they up to this week out there in the Big A?
Yeah, it was interesting. This cycle was the first cycle where Apple Vol had been up incrementally into earnings than the previous cycle since last October, the previous October cycle, actually. And so I looked at it and I said, okay, something's amiss here. And then, of course, Apple blows the doors off after, being, having basically been kind of a meh earnings the last couple of times and Vol getting pummeled. This time they actually bid it up and they were right. So there were at least marginally. So there was definitely something there. And so, yeah, I had looked and said, well, maybe that means it's going down. Obviously, I didn't play it. But I'll tell you what we did do is after the move, we did play to fade, and that has worked out pretty well. That typically with these mega cap names, when they get that type of an outsized move, even if it's deserved, there will be some just profit taking of people adjusting their positions. When you've got a stock, so a lot of people think, well, people are quote unquote profit taking. One thing to think about when Apple makes a huge move, or a Facebook, and and they've had as big of a rally as they've had, selling some Apple doesn't mean that I don't like it. It means I'm rebalancing my exposure. I mean, Mike, in your portfolio, kind of in the master portfolio that has Apple in it, if you didn't do any portfolio adjusting with Apple, how much more of a person's portfolio is it than it was at even the beginning of the year? If you look at the move that it's had from like 135 to 175 or something crazy like that. I forget the move that it's made this year, but it's been sick. And so you see this incremental selling in names like Amazon, Apple, Facebook, because rebalancing needs to happen in portfolios. Otherwise, you just become an Apple shareholder, which these people don't, which a diversified portfolio probably wants some Apple, but doesn't want to be all Apple, and that's what can happen. Facebook, kind of the same thing. Amazon, I guess the world decided that they'd rather have somebody that gave $28 billion to charity be the richest person in the world rather than somebody who wants to put 28 billion people out of work.
It was funny how quickly, once that headline started making it out there that Bezos was the richest man, how quickly that the shares retreated after that. So maybe there is something to that. You're right. Speaking of some names that people have faded aggressively, everyone and their mother's been fading the action cam segment. Probably chief amongst them, GoPro, ticker symbol, of course, GPRO. They closed today about 8.25. They were popping off after the bell too. They're pricing in about $1, looks like $1 and change on that at the money straddle. And in the after hours, they seem to be doing just that. They're trading up over $1 right now, about $1.20 or so. So maybe, who knows? Maybe the worm has turned. Mr. Uncle Mike, I know you're a huge action cam fan. What say you about anything? You got any thoughts on GoPro, and also what Mr. Rock Lobster just asking you here about Apple and rebalancing?
Lobster.
I'm
Stop
sorry.
calling me
Meatball.
Rock Lobster.
I got Rock Lobster in the brain. Meatball.
And, the one thing I have to regret is that GoPro was invented after Mike had given up football, because I would have loved to slap one on the top. I would love to have some file footage of him laying down a hit in college or in Bill's training camp. That would have been fun.
A nice pulling block there when he was on the line.
Yeah, exactly. Just taking out, Tommy Harris.
I got plenty of old game film. I'll show you guys sometime if you want.
I'd love to see it.
GoPro, but I got plenty of game film, no doubt about that. But yeah, I agree with Mark 100% on the rebalancing, because especially with the larger names, because let's say someone has a portfolio where they're trying to be balanced, you almost have to do it. With a mutual fund, for example, mutual funds aren't allowed to have more than 5% in one holding. That's just, otherwise it can't be a mutual fund. Now, there's obviously tons of, I think there's even more product types than there are products that exist out there, but the general mutual fund is not allowed to have more than 5% within one holding, and most funds of any size don't even do it that way, because they want to be more diversified, and they're going to have way more stocks than that. So if all of a sudden you get one name that's just going through the roof, the fund almost, even if they don't want to, even if the fund did want to be an Apple shareholder only, they really can't, because they have diversification restrictions based upon the objective of the fund that's written in the prospectus. So I think that with Mark saying, it makes a lot of sense, because not only to the upside, but let's say all of a sudden that XYZ is a core holding of a mutual fund, and they want to have XYZ have a certain amount of a percent within that fund. Well, if XYZ gets killed in earnings and then just goes down significantly, well, they need to buy more of it to have a higher percentage within their fund. Now, does this happen every time? No. But there is a lot to it that the funds have to do. And a lot of times, especially if it's a large cap growth or a large cap value fund a large cap growth fund, it almost has to do that. And it's not just one fund. There's other funds out there that have similar objectives that are all looking at the same thing. And especially when you have a big name like that, there's a lot of dollars being traded by a lot of different funds.
Yeah, I love all the hardcores out there who are hitting us up with what they're watching, what they're trading right now. It is a hot earnings week, and a lot of people hitting us up also, not just GoPro, but Applied Optoelectronics Inc., ticker symbol AAOI. They had a good day, at least in the actual trading day, up about 5%. Flirting with that 100 level, hitting about 98. And then in the after hours, after their earnings, apparently not so much. They're priced in right around $12, or right about 12% for that at the money straddle. And looks like they're taking it on the chin in the after hours, off about 26%. So they're giving up all today's gains and a lot more, trading 72.5 in the after hours. So a lot of things rocking and socking and moving and shaking out here in earnings this week. And we'd be remiss if we left this one off the board, because you guys like to talk about it all the time and hit us up. I hate it. I love it. All that fun stuff. Of course, Tesla popped off on Wednesday after the bell. They closed right about 325, almost 326. They were pricing right about a 7% straddle. That's right around 22.5 or so. And what we saw was stock performed well, took off in the after hours, opened up the next day, opened up only about $21 though. It's just a little bit shy of that straddle. And then during the intraday, it got a little bit higher, got up to about 350, right about 24 and change. So if you were patient, you could have got in all right. But again, that still shows you how difficult it can be sometimes. People always ask us, can't you just buy straddles going into earnings? Even when it moves your way, if it doesn't get all that momentum and get it really quick, you can see that fade really quick and how challenging it can be. You didn't get burned too bad. You actually did all right on this one if you were patient, but it shows how challenging it can be to do this sort of thing. I didn't say it this time. I will say Greasy Meatball. Mr. Meatball, I'm sure the other name a lot of your hardcores like to sling, or at least talk about in the pit chat there, is good old Tesla. What have you to say about what were they slinging this week? And if you have any thoughts, I don't know if you do, you have any thoughts on this crazy AAOI that's getting his legs cut off from underneath it? Have at it, sir.
I don't know anything about AAOI, although I'm going to look at that tomorrow.
That's not the first name you check every morning when you get up. AAOI, no. You brush your teeth,
Yes, every night at 3 a.m, I wake up to see what AAOI futures are doing and start there. No, I think that if you look at Tesla, if his Tesla, and I put this out on Twitter, so I'm stealing my own joke, but Elon Musk predictions are about as reliable as Donald Trump tweets. The guy is just the market's basically like, lie to me, leave me. It's like a what was that name? The Sundays or something like that. It's like
That's a '90s song. That's not your era.
It's not really. Yeah. How about that? Tell me lies, tell me sweet little
There you
lies.
go. Late '80s Fleetwood Mac.
Tell me lies, tell me lies. That's basically the way the market is with Elon Musk, and they bought it up. But there's some. I'll tell you, the more I look at Model 3, the more I see a lot of risk to Tesla shareholders. And here's kind of the scenario that really worries me. So, you've got the Model S that's $90,000 and is an awesome car. You've got the Model X that is ugly. It looks like a Model S. Elon Musk took a Model S and then beat it with an ugly stick until it came out the Model X. And still great on the inside, though, but just terrible on the outside. It looks like a jelly bean that fell out of my mouth. And what you're going to do is then cannibalize those sales with a $35,000 to $55,000 car that you can't even produce yet. And so here's the risk. So you can sell. What did they sell? 20,000 cars this last quarter. 25,000 cars, still not a lot. You can sell 25,000 cars with a net average ticket at, 80 or 85,000. All right, that's a lot of revenue. That'll help things. That you can show a business model there, or I can sell hopefully a lot of these Model 3s. But here's the problem. If you can't hit the production, then you've got a lot of $1,000 deposits on a Model 3s, and that's it. And you're missing out on a big ticket $85,000 sale. So not only do you need to sell 2 or 3 Model 3s for every Model S in order to get that amount of revenue. I'm guessing the margins are a lot tighter, and you also have this risk that if you can't hit production targets, you're going to have massive cash flow problems, which then means that you're going to have to either hit the bond market or sell equity or both. I think he's lying when he says he's not going to sell equity. Who would loan them money? And why wouldn't you go into the equity market if you're going to get that kind of a crazy valuation? It's cheaper for him to sell equity at the valuations that he gets than it is to borrow. I mean, that's Mike, if you are a Tesla, if you're Elon Musk, all right, or you're the Tesla share, do you sell Tesla? So do you sell a small amount of shares at $340 with a valuation greater than GM, despite making less than 100,000 cars a year, or do you go into the bond market and potentially have issues with bond guys going after? I mean, the equity market for Tesla is the gift that keeps on giving. I mean, what would you do?
I mean, unless there's some type of of people that would be willing to buy Tesla bonds for very low interest rates, which I doubt there would. They
want convertibles. They all want convertibles.
Yeah, then I think you're better off just going to the equity market especially if the only thing that's out there would be convertibles.
I mean, so anybody that thinks he's going to go and do a big debt offering, especially in a rising interest rate market, and where junk stuff isn't as popular. I mean, the idea that Tesla is going to be an A-rated company? I mean, who's going to give them money? They're not Apple. So there are some real risks, and I'm not saying that this valuation couldn't be realized and actualized by Tesla in 3 or 4 years, but how much more are you willing to bid this thing up before they can prove production? And it's getting a little sky high here.
A little. I think it's been there approaching that way for a while. Of course, if you talk to the zealots out there, and they are out there, and I talked to a few of them, it's all a battery play, and everything else is just smoke and mirrors for the big battery endgame that they got planned. Whether you're buying or selling, since you're talking Tesla, let's keep on rolling into the odd blocks. We got some more Tesla action coming, some weird stuff going about there today, so we'll get into it more in the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for The Odd Block.
Hi, everybody. Welcome to The Odd Block. Like the man said, this is the portion of the show. We break down the weird, the wild, the wondrous, paper, lighting it up today, since we're talking Tesla, some weird paper out there today. You guys are always asking us again about these puts. The puts still traded again today, 154, I should say, to be precise, of these 50 strike catastrophe puts out there in Jan 2019, hitting the tape. Interestingly enough, open interest actually down about 500 contracts since our last show. They're down to about 28,000. They're about 28,500 on our last show. So someone perhaps coming in and deciding no more of these puts. I want to close some of these bad boys out. Either way, though, these things still trading a couple hundred contracts a day, give or take. So there is still a lot of action on this strike, which is weird because there's not much action for anything around it. But this strike seems to just attract the attention. It's like a little small black hole, a vortex out there that just keeps printing paper day after day, week after week out here. And speaking of weird stuff, I don't know, I almost called you Rock Lobster again, Mr. Meatball. Did you see this weird? When I was looking up some of those puts earlier today, I saw someone putting up, talking about the flip side, all those catastrophe puts. Someone put up today. I first saw the upside, so I saw the 470 calls trading 400 times in March out there. Then I dug a little bit further and saw it actually was the March 250 470 strangle. Paper came out and bought that bad boy 400 times today, Mr. Meatball. What say you to that, sir? Mr. Meatball, you're pulling a Rock Lobster. You have muted yourself, sir.
Yeah, the funny thing is I was unmuted, and I just muted myself when you asked me. So I thought I was muted, so I was unmuting myself, but it turned out I was actually just muting myself. That's interesting. When I see strangles like that, it makes me wonder whether that's related to some sort of long equity position, where maybe they've got their long equity, they've got laddered sales. But they also want to have a floor and a level where they would buy back in, or it's somebody that is maybe has some sort of other type of like premium sale, short put type of deal, and they're setting this up as a long-term hedge. There's a lot of different ways to use this, but associated with some stock, it's an interesting way to ramp up if Tesla catches a bid.
Yeah, ramp up if a hit catches a bid, or have a little bit in your back pocket in case it gets clipped quite a bit. Yet again, speaking of getting clipped quite a bit, our good friend Mr. Schwartz there of Trade Alert Infamy out there chiming in on those AAOI puts. He says AAOI. He says the SEP 90 puts were lighting it up over the past 2 days. 2,000 trading yesterday, 4,000 today, $9 to $11 on the range. Now $20. So it seems like some well-timed puts were lighting it up out there in AAOI as well. Go figure. Options market a little bit predictive. Didn't look too good in today's intraday trading, those puts, but in the after hours are so far looking pretty precise out there. All right, let's move on to some other paper we're seeing today outside of the crazy Teslas out there. Let's move on to Flotek Industries. I know one of the other Meatball's favorites out there. He wakes up in the morning, he checks AAOI, and then he checks FTK next. Closing today, $5.91, up almost 8%. So not a bad day here for good old FTK. It's a name that does a whopping 451 contracts a day. Today doing about 13,500. So a pretty decent day for them, about 14 to 1. Puts over calls, and what caught our eye was some, as you might imagine, some put action out there in good old Flotek Industries to the tune of the DEES 5 puts, so going all the way out to DEES and a wee bit down to the 5 handle. We saw paper picking up about 10,000 of those bad boys on the day, trading those. Actually, seeing these things, they're actually hitting the bid on these bad boys for about 50 cents. They were about 50 bid, and they came in, blasted out about 10,000 of these bad boys of note. No open interest on this strike, so clearly all opening. Also worth noting, we did see a little bit of shorter term puts going up, about 2,400 of the SEP 6 puts going up on the day for kind of different prices, 40 cents, 45 cents. Going on. Those are clearly opening as well because, again, no opening, no contracts open on any of those strikes of note. Also worthy of note, this one is one of those names where short sales a little bit hard to come by out there, so that clearly factors into the option paper we see out there. And if you've been watching this name, this one's had a bit of a, shall we say, a bad run over the past few days. They had earnings back on the 1st. They closed right about $8 and change going into the earnings. Then, of course, taking on the chin, dropping sub $5 the next day before rallying to about $1 to where they are right now. So it's been a very interesting, very volatile day out here in good old Flotek, and someone at least in the near term saying, 5 handle, this far, no farther. Mr. Meatball, what say you to these apparently line in the sand puts here, as your counterpart, Mr. Rock, likes to call these out there in Flotek Industries Inc., one of your other favorites?
It is one of my favorites. I don't know if you know this, but Flotek actually makes the suck cut.
I was going to say, do they make the Flowbee? I knew that's where you were going. I knew it.
They make the Flowbee, the suck cut. It sucks as it cuts. And everybody loves it. Why wouldn't you? And yeah, no, it's a great little company. Yeah, I've seen FTK pop up on a couple scans here and there, but I've never really taken a hard look at it. It's a $5 stock. I've got better things to do with my time. But yes, that's exactly what these are in fact line in the sand type puts.
All right. Oh, Mr. Schwartz tuning in aggressively, sending me nice charts here. We'll have to share these. We'll see if we can share these out via social media on the open interest on these Jan 2019 50 puts out there in Tesla. These aforementioned catastrophe puts. You can see how it has been trending north, shall we say, over the past year or so. Something we've been talking about a lot here on the show. Someone keeps adding in a little bit at a time. Even though it has ramped up over, you can see in this chart, since about mid-March or so, which is kind of when we mentioned it. We first noticed it anyway, back there on these puts. So fascinating stuff here. We'll tweet out those charts for you guys. You can see them too. All the goods. Maybe we'll put them in the show notes for you guys. Speaking of the show, moving on to Mitek Systems Inc. A lot of weird names on this one. Hence the odd block. Ticker symbol MITK. A lot of TK names for you to parse today, Mr. Meatball. This is the name closing today, about $10 and a nickel. So not a bad day, up 8% for this one. 2 out there in good old Mitek Systems. If you're not familiar with this one, they develop, market, and sell mobile capture and identity verification software. So there you go, easy to say that. 270 contracts a day is what this name usually puts up. Today, doing about 7,000, 26, almost 27 to 1. Calls over puts. This one's a bit of a weird one. I first glanced at it, I thought maybe it was a bit of a newsletter because it had that kind of telltale feel to it, where a big chunk going up earlier in the day, then a lot of smaller chunks. What we saw with the SEP 10 calls going up, total at the time about 5,400. At the end of the day, about 6,400 and change, having gone up. All kinds of trades going up, but they were mostly in small blocks, so it wasn't like 5,000 went up at a clip. It was 750 to kind of start with around that time. Then we saw a lot of smaller blocks filter in, 100 and change and stuff. So it seemed like it was all the similar paper, similar orders, just kind of parsing it out throughout the day. Prices ranging from 97 cents all the way down to 45 cents. Most of these lifting offers out there to get these done. So it seems like most of these were paper gobbling up these SEP 10 calls. OI pretty much non-existent on this strike. So someone appears to be opening and doing it for size, even if they're doing it kind of piecemeal out here, which is the way we see a lot of these block orders get executed these days. Sometimes they kind of come in and just take little nibbles throughout the day rather than just move the whole thing willy-nilly at once. So interesting stuff out there. Looking back at the year that's been out here in Mitek Systems, it's kind of been all over the board. Dipped as low as about 5.25. back in November of last year, and then saw some highs recently for about 10.5, right about a couple of weeks ago here, before kind of settling in where it is right now, right around the 10 handle with these earnings. So interesting stuff, and someone out here clearly saying, you know what, I'm liking that 10 handle. I like my upside chances on that, and I'm going to load myself up. Some of these SEP 10 calls. Mr. Meatball, what say you, sir, on someone liking what they see in Mitek, at least it appears, and wanting themselves some of these SEP 10s for size?
They said, I want my calls in Mitek. That's the way they said it. And
I believe that's exactly how the order was executed.
And then they pushed the incremental buy button all day. One way, a lot of times people wonder, like, why do people do these intermittent orders throughout the day instead of just buying a bunch at once? Well, a lot of times they want to have like a time-weighted purchasing so that they're getting kind of, as the stock moves around, the average kind of where the kind of an average look at where the underlying traded all day, as opposed to just, well, we bought them at 9:30 in the morning or 10:30 in the morning. So that is one reason you'll see these things get broken up throughout the day, is that, instead of just buy 10,000, they want to buy 10,000, but they want to buy them kind of on an even amount throughout the day, so that they have a more fluid price. So if the stock was kind of easing off during the day, they're buying kind of the average price of the day, as opposed to buying the high. Or if the stock is rallying all day, they're buying kind of below the kind of the average price for the day. It's a way of kind of getting to like a VWAP or a TWAP, if you will, a time-weighted average price. And so that's part of why you'll see those things get broken up sometimes. I don't think TWAP is a official statistic, but it is something traders talk about.
The TWAP. Everyone loves the TWAP out there. They're throwing out some acronym soup for you there, listeners, as we wrap up here on the Odd Block with another weird one, IAC Interactive. A lot of newcomers on the Odd Block today, which is always fun, getting some new blood out there, even though Tesla manages to sneak in there a lot these days. IAC InterActiveCorp, ticker symbol IAC. If you're not familiar with these guys, they are a media and internet company. That clears it up. No, I'm joking. They actually own Vimeo and Dictionary.com and Match. They own Match.com as well. So they have a portfolio of online entities. This is the name that does about 800 contracts a day, doing about 9,200 today, about pretty even too, puts over calls, and you'll see why in a second when we break down the trade we saw out there. We saw, you call it what you will, a bearish risk reversal, probably a collar. We saw someone picking up those SEP 105, 115, let's just call it a collar for sake of argument, about 2,000 times. Paper buying the put for $1.50, selling that 115 call for $2.85. So net, they collected a credit of a nice $1.35 on this trade, doing it, like I said, 2,000 times. And looking back here, open interest worthy of note is that is pretty nominal on both these strikes. So this is all opening. And again, this could be a straight up outright bearish spec. Usually when we see this, though, this is against some sort of underlying position. So that's why it's probably more of a collar rather than a bearish risk reversal, but it can delve into that territory at times. And looking at this name over the past year, it's been an interesting one for the folks who run Match and a bunch of other portfolios. This thing was trading about a year ago, kind of in the doldrums, right about 56 and change. Obviously, it's almost double. Actually, it has pretty much almost exactly double, so almost 112 out there today. So pretty good year out there for IAC. And our friend out here, perhaps deciding, again, you see this chart that also puts some weight in the favor of it being a collar. Someone probably sitting on some nice gains, wouldn't mind locking those in around the 105 level. And if he could do it and also get a credit for it, and he still gets some upside on to boot, as the Canadians would say. All in all, not a bad trade. Mr. Rock, I almost said it again. Mr. Meatball, take us home. What do you think about this? This probably a collar, but if you disagree, feel free to weigh in here in IAC.
You know what? I don't understand why people don't collar all the time, especially with vol this low. And generally, the way they've been bashing equities, puts are usually cheap. It's kind of shocking, but not a bad play. And I agree with you 100%. It is likely a collar. And, collars are a widely used industry practice for those that don't understand how call spreads work.
Yes, they are indeed widely used. And some good data, we talked about this before from our friends at OIC about the use case for collars in a bunch of market conditions. Speaking of market conditions, it's time for Uncle Mike to walk us through a few of his own. It's Thursday. That means it's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, Uncle Mike, we've been parsing Tesla puts for quite a while. Gave you a lot of time to rest up and think about what you wanted to weigh in on and hold court on today. What you got in store for us today, sir?
Selling premium with a 9 VIX. How about that?
Ooh, are you going to perhaps harvest the risk premium?
Well, I want to go through just kind of the scenario with which I'm doing with my SPY strategy right now. In that, we've done as anyone who listens to the strategy block more than twice knows, we do a lot of different strategies within that section of our portfolio. That's the most aggressive thing with which we do, and typically the number one way with which we mitigate risk on is that we have smaller positions on it. But and the other way with which we'll do it, of course, would be to use risk management, which we talk about on the strategy block all the time, and which I'm going to talk about today. So on July 20th. With the markets going higher, I've been bullish in some way, shape, or form for a really good chunk. I've had bullish exposure to the S&P for a very good chunk of this 2017 year. And what we decided to do on the 20th of July was that I'm still bullish at that point. Let's go back in time to July 20th. I'm still bullish. And if we have a major rally in the 100-point rally in the S&P over the course of the next month or so, I want to be a part of it. Now, with options as dirt cheap as they are, my personal opinion, I think now would not be a bad time to buy some premium. So on July 20th, I bought a 243 call option for September on SPY. Now, with that, I did take a half position in it for the most part. I shouldn't say totally half, but let's just say for purpose of the strategy block, to keep it simple, let's say I took a half position. By doing that, that gave me the approximate deltas that I wanted within it of what I would have for a full position if I were doing some type of a spread. Now, why did I want to take on just simply buying a call? Well, of course, if the market goes up in a very rapid fashion, being long a call is going to beat being long a call spread almost any time if it were to have a very large move on it. And on top of that, let's say if it goes down, if the market does go down, it's a half a position. My plan was to exit the position or do some type of risk management. My line in the sand was 245 on SPY. So we have a plan if the market goes up, and the plan if that were to happen would be to just simply look at the account every day and smile, probably make some adjustments around maybe the 249, 250 level in SPY, of course, to take something off the table, protect downside risk, that type of thing. We had a plan if the market were to go down. That would be, of course, if it hit 245, we would do some type of risk management, whether it be take off the position or adjust to something different, something along those lines. But what's happened over the course of these last few weeks, well, the market hasn't moved. So if you look at just a chart of the S&P from July 20th till today, we have not had a lot of movement on that. And when you're long premium and the markets don't move, that's not a good thing. So I want to go over some things with which I did as a risk management technique for the market going sideways. This was kind of part of the plan from the get-go. The first thing that I'd like to mention with this is that since it was a half a position, had the market gone down slightly and we've gotten a little bit of a bump in volatility, my plan was to sell a vertical put spread in some way, shape, or form. Now, which one we would do, that one I don't know until we actually get the opportunity to look at it, but that was kind of the plan I had going into it. And that would have been my preferred medium, would be to sell something on the downside. Just because of the fact that I'm still a bull, and selling calls to cap the upside is not the funnest thing for me personally. But seeing as we had virtually no volatility in this market. I shouldn't say no volatility. There's always some volatility somewhere. But since we didn't really have very rich option premium on the put spread side of it, and what we did have, we didn't really have the advantage that I usually like with the put spread if we're doing something short term, to where we sell one leg for like 40 or 50 cents and then the lower leg for like a nickel or something like that. And even though the vol skew isn't in your favor, it's a nickel, who cares? Didn't really have that showing. So I had to go to selling some calls against this long call. Now, I've thought about also doing some call spreads, which I've talked about on the show as well. But this was a situation to where I just wanted to be in these guys for maybe a day or two. So over the course of the last week, the cost basis of this long call option was $6.33 per contract. For the most part, there were some exceptions to that within the group, but let's just say that because that's a vast majority of the group, and for purpose of example as well. But we had been in it for about 11 days, and on August 1st, we were at around the 247 level in SPY. So I sold, and this was actually on Tuesday, I sold the Wednesday 247 half call for 30 cents. Now, thankfully, we did not have a major rally Wednesday morning. Actually, I believe we came down a little bit, so got out of that for 13 cents. Following day, on Wednesday itself, after we came down, market rallied, sold the Friday 248 call, 29 cents. Was able to get out of that this morning for 9 cents. So my point is that if you are going to try to mitigate the risk of time decay, which is what I did in this case, you really have to be careful. This is not my preferred medium of doing this. And every time I had the plan to where, okay, if we do go up higher, we're not going to lose that much on these calls. I had a very strict stop loss point, meaning if we'd have gone to the 248 level on the 247 half calls, my estimate was that we were going to maybe lose about 20, 25 cents on it. I'd have been fine with that because of the gains on the long call. And with the 248 call that we just closed out today, I'd have been fine with maybe a little bit over 248 as well. But the other point that I want to make with this is that in order for those to be losing trades, the market would have had to make a new all-time high. And if that were the case, well, I'm fine with that. But at that point, whenever the market has to do something...
Well, if the market makes an all-time high, that's actually the best time ever to sell, isn't it?
I've heard that at somewhere. So with that being said, my point is that if you do have to sell calls to mitigate time decay risk on your long calls like I have to do, make them quick, get in and out quickly with them, because this is not something to where it was not a pleasant thing this week, but with the calls with which I was able to sell this week, we're back to the point to where the loss on the long call from a time decay standpoint, we're still at roughly 247 in the SPY, but with the time decay that we have had taken away from us, we're back to around the same. We're about back to break even on the long call as well because of the gains that we've had on these little short call scalps. Not recommending it if you can help it, but at certain points, it's something that I think you have to do, and that is the strategy block for today.
Short call scalps. Who are you, and what have you done with Uncle Mike, sir? I'm deeply offended at these uber aggressive strategy blocks you're putting out there now. You know, slinging, scalping. You're getting way too complacent out there. Maybe a little bored out there. I'm giving you a hard time. Of course, thank you for that, Uncle Mike. Let's move on into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show. We break down what we're keeping an eye on for the rest of this week into the weekend. Let's go check in really quickly on some of the names you were talking about before. Mr. Meatball's new favorite, I should say, AAOI, Applied Optoelectronics, still taking it on the chin, trading 69 now in the after hours. They're flirting with 100, now trading $69 in the after hours. So Mr. Schwartz's well-timed puts were indeed very well-timed, but perhaps someone should take a look at those, and I'm sure someone will forthwith once this hits the tape big tomorrow. And seeing some other names talking about GoPro after looking like they were maybe shedding some of those, some of the weight, the albatross that has been around their neck for quite some time, giving up a little bit in the after hours now. Still up about 84 cents, but they were up well over a buck and change a little while ago. So looks like they're kind of right in line with where that straddle was, actually a little bit underperforming that right now. So we'll see if that is the narrative going forward, or if they can fight that and open strong tomorrow. We shall see. And of course, speaking of tomorrow, we do have some numbers popping off there before the bell, so we'll see how that impacts our VIX going forward. Speaking of that, Mr. Meatball, what are you watching for the rest of this week into the weekend, sir?
Oh, the fact that AAOI is getting destroyed. And the price is 69. The amount of jokes that I just ran through my head. Your
reserve is appreciated, sir. Your restraint.
69 is well, you get where I'm going. You know what I'm watching? Non-farm payrolls. We're kind of getting to the end of the earnings season. Like I said, I feel like we're going to have some incremental selling next week just on the backs of earnings. We had good earnings season. And Mike, or you guys, tell me if maybe I'm out telling tales outside of school, but I just feel like the last times that we've had really good earnings seasons, they've then taken the market down a little bit. Maybe I'm wrong. Maybe that's revisionist history, but I'm looking for some sort of sell-off then some sort of sell-off in the next week or so. I feel like we're gonna get a VIX of 13 or 14. Sometime.
That wouldn't surprise me. The last few cycles haven't exactly been super robust from an overall earnings perspective. Certainly not like what we're seeing now. So perhaps that might be a little bit of a flip of the script, and maybe that will prompt a lot of profit taking or something else along those lines. People deciding, hey, or maybe they'll come in like our other friend here in the op block today and just start lighting up the collars. Maybe that'll be interesting in and of itself as well. Mr. Uncle Mike, what say you, sir? What are you watching for the rest of this week into the weekend?
Of course, non-farm. But in terms of like what might be happening in the near term with the marketplace, we have just been glued to this 2470 level approximately with the SPX for a while. And to Mark's point, we could be in for a sell-off in the near term just because of the good earnings announcements. But on the flip side, this has been a very strong bull market since November. I believe we're up. Oh gosh, I believe it's roughly 4,000 points in the Dow, which is no joke. So yes, we could get a sell-off, but man, this is one bull I'm not going to try and stand in front of just because of what's been going on over the course of the last, since November.
You wouldn't stand in front of it anyway. You love yourself a good bull. You'll wave that red... You'd wave that red cape and let it come right at you and smile happily the whole time. You are the hardcore, degenerate bull amongst us. So that's why we love you. All right, that music, listeners, means we've come to the end. Another epic journey through the world of options. Talk some Tesla puts, talk some favorites like AAIO, new favorites perhaps. Talked a little bit of some GoPro, all sorts of fun stuff. Apple, talked about Uncle Mike slinging, scalping, some crazy calls, all sorts of craziness going on the show today. Hopefully you enjoyed it. Got your money's worth because it cost you nothing. All right, and Mr. Uncle Mike, we'll start with you. What are you cooking up over there in the land of RCM Wealth Advisors, sir?
Once again, if you are looking for a financial advisor who is not afraid of the word collar, feel free to contact me at TOSAW@RCMFS.com.
Looks like the Skype gods, just as he was finishing up, the Skype gods stopped smiling on him out there. The one line in St. Charles, someone else started to use it and knocked him off. Hit him up over there at Tosaw at RCMFS.com. So you too can commence the war on ticket charges, and maybe you get yourself someone who can roll your puts for you. Hit him up. I'm sure he'd love to hear from you. Speaking of hitting people up, Mr. Meatball, what should people hit you up for these days?
On Monday or on Tuesday, I did a big write-up for Kramer on VIX, kind of laid out the case for why I think there might be a sell-off coming. You can find it on our blog. Go to occupy.com/blog.
By the way, I have to say I love whenever he calls you market chartist and technician. I was like, has he ever met Mark?
Well, what's great?
He insults you. They insult you every time calling you a chartist.
I know, but they called me Mr. Vic, then the Vic Master. So on Bob, we've got Dr.
Russell may be taking umbrage at that. He may want to lay claim to all Dr. and Mr. Vic's.
Well, he's Dr. Vic's. I'm Mr. Vic's. So we can, or I can. Check it out. And in addition, right above that is where you can download my book, The Fear Game, and it's some just some basic things everyone should know about the VIX and trading VIX futures and options.
All right, tune in to optionbit.com to hear more from my favorite chartist, chart technician, technical analyst, Mr. Greasy Meatball, Mark Sebastian, the man who probably hates technical analysis even more than I do, which is saying something. So well done there, sir. I love seeing your charts spread far and wide. And on behalf of the Meatball and Mr. Uncle Mike, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing to the show. And of course, for joining us live. We love you guys too. And we'll see you next time for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.